Top three things to consider before you make your investment decisions. A very popular part of our show. You can see here, these are our three things for this week. Be mindful of range-bound markets. A lot of people think that the market is range-bound right now, and we'll talk or explain what we mean by that. Key economic data. We received some key economic data just this morning. PCE came out in the US. That's the preferred measure for the Federal Reserve to look at with respect to inflation. How is inflation going? We also know that we have a jobs report coming out at the end of this week. The Fed will meet next week and give us their update with respect to interest rates. So key economic data. We'll touch on that briefly. Corporate earnings. We are knee deep, maybe waist deep, or up to your neck perhaps in corporate earnings. They're coming up fast and furious a lot. Well, pretty much most of the banks or all the banks in the US have reported. Now we're getting into the big tech earnings. We had Google already report, or Alphabet. We will have Meta today report, Amazon, Microsoft this week, Apple, NVIDIA will report towards the end of May, but AMD, I believe, reports coming up in the next few days as well. So corporate earnings is the third topic or third idea you need to watch. So let's move on to our first idea. Be mindful of range-bound markets. And what do we mean by range-bound? Well, let's show our first chart of the S&P 500. This is a chart, I believe it's a year-to-date chart. There you have it. And what we mean by range-bound, if you take where the markets were beginning of April, you can see it had a very sharp decline in April, going back even all the way to, let's say, middle of March. And where the market is today, you can see the market really hasn't gone anywhere. It's gone down and then right back up. A lot of individual investors believe that this market is range bound because of earnings, because of uncertainty. So what we mean by that is a lot of companies can't tell us what they're going to make or how much money they're going to make, their earnings, what their earnings look like in quarter 2, 3, or for the full year. They're removing their full year guidance. So how much further can markets go if there is no guidance? And so basically what researchers do, analysts do, investment advisors like myself do, we take, okay, well, let's say the S&P 500 could have maybe, $250 of earnings for the whole S&P 500. You put a 20 times multiple, which is a little pricey. Maybe you have 5,000 on the S&P 500. Or maybe if you think earnings multiples are a little high, 250 is a little high, maybe $200 multiple earnings per share of the S&P 500. Again, 20 times earnings. Now you have a 4,000 point mark on the S&P 500. So you start to figure out, you add up all the earnings that are coming out from all the companies on the S&P. You figure a multiple, 18 times earnings, 20 times, 22 times. We got up to 22 times at the beginning of this year. And you can start to see how much or how much higher the markets can go. And to me, it's tough. It's tough to start to get significantly higher. I think you're going to have to start to see earnings on the S&P 500 get closer to $300. Then you put a 20 multiple, and now you're looking at 6,000 points on the S&P 500. We're at 5,500 roughly today. So most people think that the S&P 500 is range bound between 4,800 on the downside and maybe 5,500 on the upside, and that's where we sit today. And I'm not so sure I agree with that. I think we can move higher. Our next chart here shows the Nasdaq, and again you can see that it's gone down, but right back up. And again, that back up has everything to do, in my opinion, with the talk about trade negotiations, or at least the beginnings of trade negotiation talk between China and the US. Our next chart shows the S&P 500 PE ratio for the S&P 500. There it is. You can see a big spike back in all the way from 2019 to 2021, the COVID days, if you will. Then right back down during 2022 when the interest rates went up 11 times in the US and in Canada, started to move higher, 23, 2024, 2 fantastic years. But again, S&P starting to get stretched. And now most recently, S&P numbers coming down again. Sorry, I should say PE numbers on for the S&P coming down again. And that just means that, yes, there are bargains out there, which is a positive thing. So whenever you see these kinds of things happening, in my opinion, it's actually a positive. So first point I wanted to make was that being mindful and thinking about these ranges, the low end, the high end. We start getting close to the higher end of the range. Maybe that's when you start to be a little bit more cautious. Next point, I wanted to talk about key economic data. And as I said, we have a lot of economic data coming out in the next little while. We had US GDP reports just this morning. Our first negative, or I shouldn't say our, the United States first negative GDP quarterly report that we've seen in quite some time. In Canada, we're just kind of flatlining. So that came out. We have a chart on that right now. There it is, our first quarter for the US GDP. The first read of it, 0.3% negative. You could see coming out of end of last year, Q4, 2.4% positive. So a big fall off in that. We also had PCE, which is the inflation data out of the US. That, here you have it. That actually has come down. And it makes sense that it would come down. If the economy is slowing down, then inflation should be coming down as well. 2.6% on the headline number. Sorry, 2.6 on the core number, which excludes volatile food and energy, and 2.3% on the headline number. So inflation is coming down, but that is possibly because we're seeing a slowdown in the US economy. Our next bar charts here show Canadian GDP. We had that number as well. You can see February was pretty much a flat line, pretty much not much growth at all. So we're getting close to negative ourselves. That number was just released. And they also hinted that March would not be much higher, and 0.1%, not nearly as well as what we saw earlier in the year. So corporate earnings, economic data. Corporate earnings is going to be our next one, but economic data, that is something to consider. Also, keep in mind a Fed meeting next week. He's going to take the Federal Reserve, Jerome Powell, along with the Fed governors, will take all the economic data into account. They're going to take into account possible slowdown, jobs, which will come out on Friday, PCE, as I said, GDP, all that, and give us a rate announcement come next Wednesday. So stay tuned for that. The third point I wanted to bring across to everybody that you should be keeping an eye on before you make your investment decisions are corporate earnings. And I have some charts of some stocks that we talk about often on our show and some that we don't talk so often on our show about. But Alphabet reported a fantastic quarter. We have a chart on Alphabet here. You can see on the far right-hand side, Alphabet stock really starting to come off its lows. It got as low as, I think about 140, 145, all the way up to about 160. Markets are down today. So I think Alphabet is slightly down this morning and now coming into our show. But it's a stock that trading at 17 times earnings, forward earnings. I think you could get excited about a name like Alphabet, so dominating in search, in advertising, in AI, the cloud. They're pretty much right across the board. And most recently, driverless vehicles. So name like Alphabet is a name I think is quite cheap. Our next chart, Meta Platforms, formerly Facebook. This stock was once a $740 stock, now at around $550. They will report earnings, I believe, this evening. A name that I think you could take a look at, obviously, if you have the appetite for risk that a name like Meta brings. Microsoft also will report earnings. And Microsoft as well, our next chart, you can see Microsoft, another name coming up, or the price moving higher recently with the talk that the U.S. has at least begun or hinted at talking to China with respect to lowering tariffs. I know the Chinese have lowered tariffs on some U.S. goods, and there's been some talk that U.S. will do the same. Another chart here, Amazon. Amazon, another big cap tech name, biggest company, one of the biggest companies in the world today. Again, all these charts looking very, very similar. Thought I'd switch gears, show you a chart of a pharmaceutical. Someone was asking me about pharmaceuticals recently. So one of the biggest pharma companies in the world, Pfizer. Let's take a look at Pfizer. It kind of looks like a tech chart, doesn't it? With Pfizer actually coming out with earnings this week, very strong, increasing their earnings outlook going forward. But the biggest problem with Pfizer right now is it's still being looked at as a COVID stock, a stock that, even though they're very much into oncology, they're still being looked at as, COVID vaccines and whatnot. The good thing about Pfizer, pays a 6 or well over a 6% dividend. I actually think now stock is actually paying over a 7% dividend. Hopefully they can maintain that dividend and it's not cut. Next, biotech name, pharma name, Regeneron. Regeneron has one of the biggest pipelines. I know a name that I've been talking about to investors about. And Regeneron, they have drugs in oncology. They have drugs in eye disease, inflammatory disease, many different areas of the market. One of the biggest pipelines of any pharma biotech name. Yet, for whatever reason, the stock has been struggling because their eye disease medication has come off patent, and now it's being challenged by other competitors. So the numbers don't look as good. But I believe going forward, you will have some more blockbuster drugs out of Regeneron in some new areas. And last but definitely not least, Netflix. This was a blowout quarter. You can see the stock really took off after they reported earnings. A name that is definitely not cheap on a price to earnings basis. So taking a look at it at these levels might be difficult, but perhaps on a dip, Netflix is a name that seems to be, I guess, recession or tariff proof, if you will. A lot of people ask me, can you name a stock that you could buy even during these times of high tariffs? Well, maybe Netflix is a name that works at this time. But again, keep in mind, it's not cheap. So another idea that I think individual investors need to focus on, corporate earnings, along with being mindful of the market trading in a range and the economic data that we've seen already and that we will see in the coming days. Those are the three things that you need to focus on before you make your investment decisions.